Good day, guys. I hope you're all doing fantastic today. We are just going to be continuing from where we left off last time on season 1, episode 2, and we're going to pick it off from slide number 7. We are continuing with our back testing, where I've documented the screenshots, and I have a portfolio of all of these setups. Guys, if you are interested, you just click on the Telegram link and then you can download them for yourself. I've got a extensive portfolio dating all the way back to 2018 and 2017. However, these setups, guys, are preferably advantageous to market maker traders, the market maker method, and price action traders who are familiar with the supply and demand zone concept, also known as support and resistance. So guys, I'm just going to continue from where we left off. We are just looking at the first the third slide, the third setup, which is CHF JPY. We're looking at it at the 30-minute time frame. So guys, remember, I always look for the precise entry on the 15-minute template. This is the market maker template, the 15-minute template. This is where I scale down from the daily chart and the 4-hourly chart and that's where I see where the prices are in a bigger scale. And that's where I try and find the bias of the market. That's where I try and find the big patterns, whether it will be at a supply, demand zone, or do I have any rising wedge, support, resistance. And I also look at the candlestick formation or the structure of the candlesticks. How are the candlesticks moving, which is also known as price action. So I look at all of that on the higher time frame. All right, guys, just looking at this screenshot over here, right? I always look for anything that is bouncing off this 200 EMA, also known as the Mayo. And remember, I always have 3 important EMAs that I always have as point of references. Beg your pardon. All right, just looking at this crossover of the EMA, we've got the 50 and the 200, right? That's a crossover. So as the 50 crosses over the 200, I'm confident that the market in this case is still rather bullish, right? It's still scaling on the upside. So I move on to my 4-hourly chart, right? This highlighted blue circle over here is exactly the price action or the entry point at this price level right over here. So guys, what's happening right here is that you see there's the first hit on the Mayo, and then there's the second hit on the Mayo, which gives me a W. But the nice thing about this setup is that I have it in a form of a divergence. How do I know it's a divergence? We've got lower lows. Prices are pushing lower at these two pin wicks. There's the first, there's the second one. But my RSI is pushing on the upwards. There you see it broke outside of the blue support band, and then it closed inside of the support band and the red line over there. So typically this is what we call blood in the water. So having my guideline, this action over here is ticking all of the right boxes, ticking my checklist. There's the first, second hit, prices. There's the candlestick. It closed above the 13 EMA, which is that red EMA right over there. So everything on the 15-minute template checks out. And I also have a point of reference, which is this previous day's high, right? Which is going to play out to be a support structure, right? A resistance zone. This is a resistance zone, also known as our supply zone, all right? So I move over to my 4-hourly chart. this resistance zone, which I just showed you in the previous 15-minute chart, right? This right over here is exactly this point right over there. And then the nice thing on the 4-hour chart, which I picked up, is that the market is moving. Right, let me just try and find that screenshot again. Moved way too much backwards. There we are. Yes, we are back. All right. So what I noticed that, right, the market was moving in a confluence of higher lows and higher highs. And you can see the pattern structure of this support line where the prices are bouncing quite nicely off this support. So there we've got point number one, point number two. As soon as we have point number one and two, you know, we've got a trend line established. Now, if we have point number three, it means that the trend line is confirmed, right? The trend line has been confirmed. Now we're going to see if prices are going to behave towards that support trend line. And now, interestingly, I see this week over here, I like to call them spikes. Right? Spikes are usually candlesticks that are either hitting your stops, or they stop hunting, or they're picking up whatever pendings they are. So it can mean a lot of things when you see a very long wick like that. In terms of candlestick terminology, you have it as a hammer or inverted hammer. So this price action was right over here. It would have been a good buy. I saw this as a good buy. It's one of my signature trades. First target point would be this previous high, all right? This previous high, but the very interesting thing is that now this resistance trend line moving at an upward channel, right? Moving at an upward channel means that I would have a nice take profit level right on this channel over there. But prices are moving relatively smoothly if you follow the concept of the Elliott wave, right? So if one would have held that trade probably until we see a breakout out of this resistant channel, and then you took profits over there, it would have been a good trade to hold. But you know, you have to have a very resilient trading focus, and your trading psychology has to be well trained if you were going to leave taking profits from there. Probably you're going to panic as prices reverse and probably close your trade. But then again, if you understand and you've documented these screenshots, and you've trained your eye to identify these setups and how they're going to play out, I mean, you're going to have a very high confidence level in terms of, you know what, it's going to behave in a certain manner, because the market, when it behaves in a certain manner, there's what we call an order book or order block, where the big institutional traders are trying to get as many retail traders active into the market, get them to take a certain position. So they are around this point, they're probably pushing those orders to go to the upside. They're pushing the market to be bullish. They're adding all the long positions to try and get all the retail masses to buy and buy and buy, only to jam them around this area and snatch the market away from them. So if you can identify how these institutional players are moving the market and try and move with them, you would have a very unique edge in the market. Remember now, if you can train yourself and improve on finding your precise entry points and your precise exit points, and have a strategy, a risk management profile or portfolio, I think you've got a very good trading and solid trading plan. All right, guys, let's just move on to the next screenshot. All right, this is one of my favorites. very, very simple and straightforward. We're just looking at the GBP CHF on the 15-minute chart. Let's look at my checklist, the guidelines on my precise entry. Now, I practice this, guys. I print this out and I have them. I look at them every single day. So they're kind of like imprinted into my mind. You know, I subconsciously, I can tell if it's going to work out or not. So there's the 50, 200 EMA crossing. There's the bounce of the Mayo. In this case, it's the V bounce. And then after that, prices closed above this 13 EMA, which is the red EMA. But before I can execute this entry, I need to go see what's happening on the bigger time frame. Where can I find a pattern that I recognize? Will I find it on the H4 or the daily or the weekly? It can be any of those three higher time frames, as long as I can see where the bias is, which patterns are the big guys pushing the prices towards. All right. So this is the 4-hour template, GBP CHF, and remember this is the 15. This is what's happening on this template. I mean, on this screenshot is exactly what's happening on this. So the entry, which is that we hit on the Mayo, is exactly on this point highlighted over there, guys. And what I noticed when I looked at the H4 overall chart is a resistant trend line playing towards the downside. How do I know? There's a first point, second point, trend line confirmation. There I had a support point, breakout. Now the support point now becomes a resistant point. And I see what's happening now is that when it broke out of there, I immediately take this as a left shoulder, right head, and at the head, now I'm anticipating a right shoulder. But because I saw a setup which I identified on the 15-minute template, I took it early within the right direction. So it broke back through the resistance, now becoming support and actually giving us that left shoulder. So this trade would have actually worked out quite beautifully. So there could have been a number of entries. There's the first one that we just shown. This could have been your second one. Identified it on the H4. And you can see, just looking at this chart overall, prices are bouncing nicely now on this support, major support zone, which is now becoming a demand zone. So this is your support line. Now it's quite a major demand zone. So you can see that the retail traders, the retail masses are really pumping in the buy orders. And obviously the big institutions are pushing the prices towards on the upside, because a lot of sellers were jammed around this point. After this breakout, a lot of retail traders were probably selling, only to be jammed. And then the market around this area over here just pushed to the upside. So a lot of traders were actually smashed around this area moving up. So yeah, guys, so just looking at that example again of documenting and back testing your strategy. So this is my strategy, and hopefully it will add some value towards your strategy if you can find a common ground. Let's see if we've got another one. Yes, we have another one. Typically, guys, these things repeat themselves. They repeatedly show themselves on the market. All I do is just wait for them to show themselves so that I can take the utmost advantage towards. Another typical example, WITH-LODZ. of the mayor. So the 15-200 probably crossed way before. I just couldn't screen grab the whole price situation where the 50 EMA crossed the 200. But after getting this set up, there's the W, first hit, second hit. There's the W on the RSI as well. And then on the 4-hour, there we can see AUD USD H4. There is the setup right over there, right? And we can see that it moved quite relatively smoothly to the upside, but I would have taken profit quite quickly around about this point over here. This was a double top. Now for the sake of argument for this chart, let's pretend that this action over here hasn't happened. So I would have probably taken profit over here and see what would have happened. But my expectation was for prices to probably come back and test this support trend line. Remember, support trend line, guys, all I need is just 3 confirmations in order for a support trend line to be validated. 1, 2, 3, it's validated. Prices just has to come and test it again or break it. It's just how they do it. It repeats themselves. Once you identify a pattern that validates or confirms a trend line by having 3 hits, just know that prices have to correct and test or break or do whatever it has to do around that support area. So simply, guys, this point over here would have been my first TP. Their price would have shot same day, 15 same day. This is probably 50 pips in and out. And just looking overall what happened, prices obviously gave this double top and double top. So we see a double top of a double top, which is actually playing out to be a full sell divergence. So you would have probably had another sell opportunity around this area. There's our divergence actually being confirmed with the RSI breaking outside of the resistant band and then closing inside again. Situation blood in the water, as we market maker traders like to call it. And then prices did shot straight back and came to test the support trend line as projected, as anticipated. Why? Because these things repeat themselves day in, week out. The only thing that we have to do as retail traders is to identify them as they play out in live trading time. That's the only challenge. But the more you study these flashcards, the more you go through them, the more you train your eye to identify them. All right, guys, I think, oh yes. Now, remember, before I forget, H4, it doesn't give you that full gist of what's happening, because you have to wait for 4 hours for a full candle to actually open and close. But if you can scale down to H1, you can have a better idea as to, okay, what's happening. So this is me scaling down to the H1, what's happening on H4. This is the action. This is a double top of the double top, which I was talking about, which on F4 is a extended divergence. There was the entry mentioned on the 15-minute template. Like I explained, my TP would have been there, but for others, I don't know how their risk levels are or how their strategy entails or works. But in this case, if you would have held on, you probably would have squeezed more pips out of the trade. All right, guys. I hope that made sense. Please add any comments or suggestions as to how I can better improve on these flashcard topics and backtesting strategy. Just a friendly reminder, guys, I have documented all of these screenshots, and if you can click on the link below, I will be more than happy to share all of them. You can just download them off my Telegram, and you can also subscribe or hit the notification button, as they say, so that you can get a notification whenever I share a video. All right, guys, I hope we all ate together this information, and like I said, I hope it added some form of value, and it will improve on your strategy moving forward. Thank you and have a good day.